You sent me a note saying that there are some things technically that you're seeing that you've only seen or have happened 4 times in the last 50 or plus years. What are they, and does it give you some optimism that a bottom is near?
Brian, that is absolutely correct. This is only the 4th time we've seen all these breadth measures from a technical perspective reach zero. And the last several times we have seen this, you had huge opportunities to be buying stocks. Not only are these indicators at zero, sentiment gauges that we look at are all at very, very washed out levels. And now is the time we need to start leaning in and start buying stocks in here. Yes, the news is really negative with the coronavirus, but a lot of it is already baked in at this point in time. And when we have gone to be more than 20% below a simple 200-day moving average, Brian, looking back into the 1974 crisis, looking back in 08, 09, looking back at where we were in December of 18 when we were on the show talking about when it was time to buy stocks, this is when you step up and you start leaning into it and start buying stocks here.
You know, however, though, Craig, we hear often, in fact, we heard at the top of this show, that technicals don't matter much right now in this kind of an environment. What's your answer to that?
The answer to that is flat out that is incorrect, because you look at some of the Fibonacci retracement levels, you look at support levels. Yes, you're breaking through some of these support levels because of the coronavirus and concerns about loved ones and the things like that and selling in these stocks. But you are seeing support levels being obeyed, and you are seeing trend changes starting to happen. And the technicals do matter, because right now earnings don't at this point in time, because we have no idea what the revisions to these earnings are going to look like. So support levels do matter.
You said might be time to start looking at certain stocks. Is there any stocks or industries that to you maybe look more washed out than others and would be a better long-term bet? Because you are supposed to buy low and sell higher.
Absolutely. And if you pull the playbook of what happened back in 08 and 09, everybody scrambled to get back into the market. You even saw that coming off the lows in December of 18. So some of these companies, like the restaurants, for example, whether it's Chipotle, whether it's Wendy's, whether it's any of those kind of names, they are down more than 50, 60, even in some cases 70% from the highs you'd seen back in January. Also, look at what you're doing with the airlines. There is going to be some support coming from a fiscal stimulus package for those. And I suspect you're going to see the same for the cruise lines. All those kind of names are tremendously sold off, well overdone, and you want to step up and be buying some of those names at this point in time. But also, names like Nike.
Hold on, Craig. I'm going to jump in because I'm sure I know you've got fundamental analysts there as well, and everybody's still working despite not being able to be in the same room. I'm sure there is some talk that some of these stocks, and I'm not going to, no way am I going to name any names, are going to go to zero. I mean, there's going to be bankruptcies in some of those industries.
There is potential for some of these to go to zero, as you would say. But again, think about what is happening with fiscal policy. They're going to put some processes in place, make liquidity available to a lot of these restaurants and to a lot of these airlines and to the cruise lines. And I think they're going to see these companies snap back pretty quickly. You can even go look at some of these food distributors, Brian. I mean, we've got real issues if some of these food distributors are going to zero.
Yeah, well, obviously not those. I'm talking about just sort of, beaten up retailers as well that have already been struggling, restaurants, retailers, whatever, already struggling before this outbreak. Hey, by the way, Craig, have you looked at all at the Chinese market? Now, China's got, obviously, they got sort of the iron fist as far as they can, they'll go in and buy stocks of their own companies and the party's part of a shareholder and part of many of these companies. So it's not perfectly analogous. But have you found any solace in the fact that the Chinese market has held up reasonably well?
Absolutely, and I think that is kind of the playbook for us looking forward from here. We're going to kind of hit the peak of this coronavirus over the next several weeks in here. We've discounted a lot of the negative impact for the virus into the market at this point in time. And if we could just get the politicians to kind of get on the same page with each other and put a plan together here, I think we're going to see a long wait and see a lot of these stocks come back, just like you've seen over in China at this point in time, Brian.
What's the next most important either data point or anything that you are looking at, Craig?
The next important data point that I'm going to be watching is I want to continue to see strength in the dollar. That means that the dollar is still on good, solid, footing at that point in time. Also, after that, I'm going to be watching to see some of these stocks start to reverse some of their downtrends, and I'm going to ultimately be watching to see if we can see the bond market ultimately continue to remain stable in here. I think the Fed action today was critical to stabilizing the bond market, and I think that's going to be a critical part to what we're going to see happen with equities in the next coming days and weeks.